How's it going, everybody? It's Stas here. Welcome back to another video. So in today's video, we're going to be going over the markets, taking a look at the S&P, the Dow, and the NASDAQ, and we're also going to be doing a trading update, talking about what I personally did in the markets today, as well as a bunch of stocks and a bunch of ETFs that I'm watching and that I'm looking to trade heading into these next couple of days in the markets. I want to dive a little bit into my watch lists here, take a look at some inverse ETFs, some tech stocks, and in general, what I have in my active watch list right here. So if you guys enjoy this video, hit that like button for me. Consider subscribing to the channel if you haven't done so already, and feel free to join our free Discord group chat and our free Facebook group linked down below in the description box. So let's get right into it, guys. And today was yet again another roller coaster ride. And you may be asking yourself, Stas, why do you say that? The markets are up $5, they're pretty much flat. Well, the reason why I say that is because the market was actually up a lot earlier. The market, when we gapped up this morning, was up to 2756 in terms of the S&P, and at that point from yesterday's close, we were up about 3.5%. We were up about $100 on the S&P from yesterday's close to this morning, and you guys can see we shed every single point of that pretty much, from 2756 down to about 2667. That is a cut of 90 points from this morning to right now. And by the looks of it, in these next 2 minutes that the market is open, we may even go red. This market may turn red, which is pretty insane. And honestly, guys, at this point, despite us seeing this maybe red day, let's just call it more of a neutral day, the bulls are still in charge. And let me explain to you guys why. And at least in the short term, that's what I mean. They're in charge in the short term. And that is because if we pull up this hourly chart, we're still pretty bullish, right? We broke the major moving averages on this hourly chart, being the 180 and the 50 SMA, the 180 SMA being this gold line, the 50 SMA being this green line. We broke above 2650, which was a major level of resistance. We hit that higher high this morning, and at this point, we're simply pulling down and to a point where I'd consider this a higher low, right? Because, again, the uptrend is made of higher highs and higher lows. That's pretty basic stuff. And at this point, we still haven't taken a huge leg down to be back in the downtrend quite yet. And for me to see us back in the downtrend, for me to, from a technical basis, to really, classify it as a downtrend, we need to see, I'd say, a break below 2640, 2650, that general area of support, and ultimately we need to see a test back down here to about 2460, and if we break that, that is overall where I can see us getting back to maybe the lows that we tested a little bit ago. But let's not jump the gun, because the technicals, again, are still pretty bullish at this point. So the key area that I'm watching heading into tomorrow is this zone, this general, 26, 40, 50, that general area up to about 2730, this general zone that we're trading in. And I called this out yesterday. What did I say, guys? I said since we closed above 2640, 2650 in yesterday's market, that was extremely bullish, and we were likely to see the gap fill up to 2730. That's exactly what I said yesterday, and that's exactly what happened. And now that we just closed the market down about $5 on the S&P, this general, again, 180 SMA support on the 5-day, 5-minute chart, and this 2650 level is going to be critical heading into tomorrow's session. And taking a look at the Dow, this thing was up 900, close to 1,000 points this morning. You guys can see it hit 23,600, and now we're down to 22,600. That's insane, right? We went up about 4% from yesterday's close to the open. Now we're back down into negative territory, down about 34 points today, down 0.15%. And overall, the 20-day 1-hour chart, very similar to the S&P. We're still in an uptrend. Short term, that is. The bulls are still in charge at this point. You guys can see the Dow actually held a pretty critical support at this close at about 22.6. So if we break 22.6, expect the Dow to see maybe a little gap down to 21.6. That could be the next level of support that we do end up hovering above, which is above this 50 simple moving average on the hourly chart. And pulling up the NASDAQ here, the NASDAQ down as well, down 0.4% at the close, down $32. But overall, the bulls are still in charge. The bulls are still in charge, especially because we held 8,000, guys. 8,000, 79.50, 8,000 on the NASDAQ is a very key level. If we break this point, I can see obviously more bears coming in, pushing us down to, let's say, 7,700. And if we break 7,700, there's going to be a lot more red, in my opinion, when it comes to the NASDAQ. So in general, why is the market going up? Well, the truth is, like I said yesterday, no one knows. All we have is theories, but there's a lot more negative stuff. We can say that, it's obvious. But one thing is that slightly these casualties and these cases in terms of the CV, in some areas around this world, they're actually starting to see a bit of a peak. I'm not sure. I can't remember exactly which countries. I was looking at a graph earlier today. It was in Europe, and we saw some cases here in New Jersey, where I am, and New York also, and the casualties slowly start to fall off. And does that mean the markets are going to shoot up? Yay, it's all over, CV's over, economy's back, everything's booming. No, guys, it does not mean that. The damage is still done, but it does give the market some short-term hope, which I didn't mention it in yesterday's video, but that's kind of why we rallied yesterday and probably heading into this morning. That's just one theory, and again, you guys probably agree with me there, and I'd love to know what you have to think about that down below in the comments, but it really makes sense at the end of the day, guys. But either way, I think, we're in a very dangerous spot. We're in a very risky spot, to the point where if the economy opens back up, this is what obviously Trump wants to do. He wants to open the economy up as soon as possible. Think about it. If we do open the economy up and then all of a sudden more people start getting it in terms of the CV, we get another wave of it, that is very dangerous. That is very dangerous, to the point that it can prolong this virus a lot longer than it needs to be. I honestly would rather shut down the U.S. until June, whatever. I don't know. I'm not a doctor by any means, but shut the U.S. down to June, buckle down, quarantine, and be done with it, right? If that is even possible at this point, or just shut down till July or something, because the last thing we need is for the economy to open up again and we get another wave of it. And even if everything opens up again, there's still people that are going to be skeptical about going out. What do you think? People are just going to go out and live normal life again? I doubt it. People are still going to be in their houses, me included, right? Not that I was going out anyway. I stay home a lot. That's the truth. I'm a homebody. But, for the people out there that go out a lot, I'm not too sure if they're going to be so jumpy about going out once Trump says, okay, economy's open, because the risk is still there. And I'd love to know what you guys have to think about that down below in the comments, as always. So let's just get into it, guys, in terms of what I did in today's session. And let's just put it this way. Today's session was great for me. Yesterday was a pretty solid day as well. I played CCL, and today I also played CCL. And if you guys were tracking the cruising stocks today, CCL being the one that I mostly track. I don't even know if the other ones did well now that I'm talking about that. Let's take a look. Yeah, RCL did well. Norwegian probably did well as well. But I traded CCL, which ended up going up a nice 10%. But the truth is, it was up 20% pre-market. If you guys were watching it, we were up to $12 pre-market. Then we rallied all the way up to $12.86 within the first 5 minutes of the session, something like that, right? Let's take a look at that to confirm. Yeah, actually, no. Within the first 2 minutes of the session, we ran at 1280. We pulled down, and take a look what happened when we pulled down. We actually ended up holding the pre-market highs, the pre-market resistance here at about 1220 as a support. And this is when I was locked and loaded on CCL. And if you guys were in the chat this morning, again, link down below, a lot of us were watching CCL, GLD, what was the other one a lot of us were watching? UGAS, DGAS, and me personally, I was glued on CCL, GLD, and DGAS this morning, right? And we got that little support on CCL, and I ultimately ended up going long when it hit 1240. That's where my limit order was. And I immediately set a sell limit at 1275 because of the old resistance here from before, from about 5 minutes prior to me entering the position. Actually, more like 10 minutes. And that's where it triggered, guys, 1275. So from 1240, I rode this rally up to about 1275. And overall, the move was close to about 2.75%. And again, guys, like I've been saying about these cruise line stocks, am I jumping in long-term in these at this point? No. For me, it's probably no at this price, but that doesn't mean I'm not going to be trading it, because for me not to trade this or even consider it, it's kind of foolish, because it does offer a lot of opportunity, especially this stock, guys, because they just got an 8% stake from a Saudi Arabian investment fund. They have one of the board of directors, he bought a roughly 1.5, it was either 1.5 million shares or it was $1.5 million of the stock. Let's take a look at that if they have it here on the live news. I'm not seeing it, but either way, a lot of there's been a lot of investments, which, here it is, 1.25 million shares. There it is. So that's a pretty hefty position. We're talking $10 million right there by director Randall Weissenberger. I don't even know if I said that right. It sounds right based on the spelling. But either way, there's a lot of hype, positive news from that aspect, right? From them, getting some big investments, raising capital, issuing shares, all of this stuff. But still, it's a lot of negatives. I think the negatives outweigh the positives, which is why I'm just simply treating it as a trade right now. Volatility, maybe a short-term swing trade, whatever it may be, right? So that's what I did with CCL. And the next stock I traded was GLD, and this is one that I'm actually holding overnight. And I don't really hold anything overnight in this environment, except, like I've said in previous videos, gold ETFs. In particular, GLD is the only one I would consider holding overnight, and today is one of those days that I did that. And initially, I got in at about 100. I believe it was 154.90, maybe 95. I ended up getting in right here, and ultimately, I wrote it up to about 155.50, and I locked in some profits. That was a quick day trade there, but I didn't sell all my shares because, again, I'm holding some overnight, because if we pull back this chart on GLD and just see the price action of gold in general, it seems pretty bullish to me. We actually got to 159 on GLD yesterday. We pulled down today. Overall, we held this 50 SMA on this hourly chart. We're seeing a bullish cross in the moving averages as well, which is simply when a smaller moving average like the 50 SMA crosses above a larger time frame moving average like the 180 SMA. That's a bullish cross, and that's exactly what we're seeing here. And if we pull up gold /GC, we hit on these futures 1742 yesterday. And on this hourly chart, we're holding the uptrend as well. We're holding this trend line. We're holding this 50 SMA. So for me, gold, and in general, I'm long gold in this environment we're in with all of this QE, everything going on. So I feel comfortable with that swing. I really do. And I think there is potential in the short term for GLD to get back to, let's say, 160. And that's kind of what I'm holding it for, as that is my first sell target, because if we pull back a bit on the 90-day chart, you can see 160 rather, is a pretty solid resistance, 158 to 160. So that's where I'm looking to offload these shares. And if we break that level, which is it's very likely, very possible in this environment, I'll probably just end up buying more there. So overall, that's what I ended up doing today, guys. I'd love to know what you have to think about that. Any moves you made down below in the comment section, feel free to let me know. Now let's get into a bunch of stocks and ETFs in my watch lists. And, let's get to breaking down some charts. Let's talk about UGAS, because this is one that, oh my goodness, guys, it's back to life, at least in the short term. It's had 3 straight days of 20% plus, if I'm not mistaken. This day we were up 20%. Yup. The next day we were up not 20%, but 14%. Still, that's pretty incredible. And today, from yesterday's close, we're up 25%. So yesterday, I told you guys, and it was part of my plan, to maybe look at DGAS, but DGAS obviously didn't do well today. It got slaughtered down a lot more. So that could be even better for us tomorrow getting into DGAS if we do get some sharp turn of events here, because it's going to happen. We're going to see UGAS cool off a bit. We're going to see natural gas cool off a bit, and at this point, we're watching NGK20, and these futures have gone from 152 nearly to 190 in the past 2-3 days, which is insane, right? So we need to see, I think, a pull down, and if we do get that pull down again, DGAS is going to be great, a great option, and that's kind of what I'm waiting for at this point. I'm not looking to chase UGAS at this point. That's kind of, in my opinion, stupid. FOMO, I'm not looking to FOMO in it, but, looking to play the pullback at this point. And some other ones that I'm watching in terms of, futures, ETFs, I'm looking at crude oil, of course. I'm looking at crude oil. We saw a pretty down day today, down about 7.5%, down almost $2 per barrel. And take a look where we are right now in this hourly chart, guys. I'm thinking if we break $23, 24-ish bucks, and we break this moving average being the 180 SMA, there's going to be a lot more red in CL, and that's kind of the technical spot I'm waiting for before maybe going short either on, USO, which is an oil fund. USO got crushed today. If you guys take a look at it, down 7%. This thing under $4.90, it could drop like a brick back to $4 and maybe even under $4. We take a look at some ETFs like XOP. XOP, oil and gas ETF, was up 3% today, actually. And there's 2 ETFs that trade based upon XOP, one of them being DRIP, which goes up whenever XOP is going down, and, Gush, which goes up whenever XOP is going up. So these are a couple oil ETFs, leveraged ETNs that I'm watching. And quick disclaimer, guys, if you're a beginner, I do not recommend you dabbling with these. These are more kind of for more intermediate to advanced traders, as they're very volatile. And another disclaimer, do not hold these overnight. I know it's tempting, there's a lot of potential, but if you read the prospectus on these leveraged ETNs, it literally tells you they're meant strictly for day trading. They're not meant to be held long term because they decay long term. There's a lot of reasons not to, because of the way that they're created and the way that they're ran. It's very complicated. That's all I'm saying. Approach with caution. Do your own research as always. And if we're looking at some of these stocks today, Square got crushed. If we're talking a short potential short, Square was great today, and I think it's going to be great in the future if this market sees another downturn like we're seeing the potential start of today, and especially tomorrow if we break those critical levels on the S&P. We saw Square go from $55 down to about $49 here after hours. And honestly, guys, overall on Square stock, this is a pretty interesting level. The downtrend is continuing, it seems like. Lower high here, under the main moving average, under $60. We failed breaking that, so I could really see Square falling. So shorting, potential short, maybe some short-term put options. Square is looking quite attractive. And when we're taking a look at some other ones that could be short plays, we have Facebook. Facebook was down a little bit heading into the close of the market today. It actually fell for the majority of the day. This was actually a fantastic short play earlier, if anybody caught that, from 173 to 165. And ultimately, if we go back to that 4-hour chart, we're under a main moving average at 174, as well as 173, 174, that level of resistance. So this could be a spot where Facebook does see some trouble, some downside, right? And when we take a look at some other big tech stocks, Amazon is back to $2,000, guys. It's like CV never happened when you take a look at Amazon stock. It was doing worse. Believe it or not, this is not, hardcore facts, but just judging on it with an eye here, with my naked eye, Amazon was doing better. It's doing better now with CV compared to what it was before the CV. If you guys remember, Amazon went through a slump where it was falling from 1,900 to 1,700, 1,600 throughout 2019, and it really only ramped up before this craziness, and now it's pretty much back to where it was before the craziness. So Amazon's one worth watching. Like I've stated in many of these videos, for the overall markets to really take a huge leg down, not saying it's going to happen, but for us to see like a 50% drop in the S&P or something like that, we're going to need to see the big boys. And by big boys, I mean Amazon, Apple, even Google, Microsoft, Facebook, these guys, we need to see them take a pretty big drop in their stock. Although Facebook has already, like we saw before, but Amazon really needs to come down. I'm talking this thing needs to get to like 1,400, 1,300, 1,200. Who knows if it does, but that is where we'll start to see a lot of wear and tear on the overall markets. And Google, let's say if Google were to get to 700, 800, these are going to be levels that the markets are going to be suffering at that point, guys. And that's just the truth about it. Same thing with Apple. And if we take a look at some of these other stocks, MasterCard, we talked about this level of resistance in yesterday's video, and we got rejected hardcore there. We were all the way at 280 this morning, and this thing ended up dumping all the way down to about 257. So that was a fantastic short play as well. So at this point, I'm not forcing any longs whatsoever. But GLD, like I've been saying in many of these videos, again, I'm long gold. Why not swing trade some GLD as it tracks the price of gold? But other than that, I'm not forcing it because, like I said earlier, I think, and like I've said in previous videos, I'm not looking to fall into this potential bull trap. And many of you guys might be mad at me. You guys might be saying, Stosh, you're stupid. This is the start of a new bull market. But for me, my gut's telling me, no, Stosh, just stack up your cash, wait a little bit, be patient, because the truth is my gut is telling me that it's not over yet. And I could be wrong. I could be missing out on some potential gains right now. But the truth is, honestly, I'd rather just wait it out. That's just me. I'd rather just wait it out. And at this point, I did buy some stocks when the S&P was down. And I'm not looking to force until we see a price on the S&P closer to 2,200, 2,300. That is where I'm looking to buy, or at least start buying more long-term stocks. But until then, I'm stacking up cash. Obviously, I'm trading, which is bringing me income. And I'm just waiting, guys. My chips are getting bigger and bigger, and I'm waiting. And I think, if I'm right, I think if this market gets lower than 2,000, and I didn't buy into these potential fake rallies, I'm going to be in a much better position. And many of you out there that are doing the same, not buying into this, hoping for a lower price, you could be in a better position as well. But again, we can also get burned if somehow this does see a V-shaped recovery. But again, my gut's telling me, nope, that's not going to happen. Don't fall into it. But who knows, guys? Only time will tell. So overall, that is a lot of the stocks. Those are a lot of the stocks that I'm watching. You know, a couple more. LK, this ended up being halted all day today. Am I buying LK? Luckin Coffee? Absolutely not. But it's still worth watching, in my personal opinion. Another stock that I'm interested in is SPCE, Virgin Galactic, as it is a company that it's pretty much one of a kind, right? Not saying that no company could come in and do what they're doing, because they are and they will and they for sure can. But it's a company that's kind of in a lane of its own at this point. And it's always interesting watching stocks that are like that. And not just stocks, but companies in general. See how they evolve and kind of how they grow their business over time. So overall, guys, that is it for this video. I hope you all enjoyed it. If you did find some value in it, feel free to go down below and hit that like button for me, and consider subscribing to the channel if you do want to see daily updates like this. And if you guys want to support me and support the channel in general for all the free content, feel free to go down below and use my affiliate link with Webull, and you actually get 2 free stocks, with one of them being valued up to $1,400 by simply depositing $100 into your account. So go get your free money. That is linked down below in the description box. I'll catch you all in the next video. Thanks for the support. As always, guys, peace out.